Hi there everyone, hope you are all well and welcome back to the YouTube channel. This video is going to be breaking down the US dollar index. It's going to be how you can use it to benefit your trading. For me personally, this allowed me to, in the past, go on a 3-month win streak, which you saw on the YouTube channel. I flipped £100 into a 50k challenge. I passed that, passed the verification, and then got a payout. So this here is just to show you how you can use the dollar index to benefit your trading. So first of all, let's just look at the dollar index on a full screen kind of outlook. These areas that are marked with the green and purple zones are zones that I have previously analysed and taken. So you can see that the accuracy is quite good. The main way that I do analyse the DXY is with the round numbers and these psychological levels alongside a couple of other confluences, but obviously it would be unfair for me to share all that when there's going to be members watching this video. So if you do want to learn the actual analysis itself, there is a link in the description if you do want to join the community, but I don't want to go into that. So basically, if you are looking at the US dollar index, it is basically just showing you the strength of the US dollar. If this is going up, the dollar is getting stronger. If it's going down, the dollar is getting weaker. And it's as simple as that. Now, how you analyze the chart is completely up to you. Test it and see if it works using your strategy. I know some strategies do work, some don't. For me, I'm lucky enough that the strategy I trade does work very well on analyzing the dollar. But what we'll notice is that if we go and split screen this chart, and if I put on the right hand side something like Euro US dollar, let's have a look. So as you can see, if we just hover over certain areas of the chart, you can see that basically when the dollar index pushes up, currencies that are paired against the euro, the US dollar, will fall. So for example, if you look here, you had a big move from here. What happened? You had a big move from there. Okay, so that's basically the mindset behind it. If the dollar is strong, then pairs like Euro US dollar, Australian US dollar, New Zealand US dollar, etc. are going to get weak. And it's basically as simple as that. Obviously, if we now look, for example, somewhere like here, where you've got these three tops, what do we see happened? We see that price came into the area, hovered, and then eventually dollar got weak, and then the euro got strong against the dollar. So it's just basically like a tug of war. If the dollar is strong, then it's going to potentially win the tug of war against the other currencies and then pull them down. So once you basically want to identify areas within the market that you think the dollar is going to get strong and weak, when price gets to them areas, you will then go onto your currency chart and then identify areas that you may want to trade. So for example, I'm not taking this area today because of NFP, but a good example of this would be that I have an area of interest here. Okay, so there is a valid area here. I won't break down the confluences, but this is a valid area for dollar strength. With there being NFP in an hour or so, I don't want to take any positions because the technicals would go out of the window. But basically, I would expect dollar strength here if we didn't have news. If we then go to the right hand side of the screen and look at Euro US dollar, if we just have an overview of the chart, what we can actually identify is that price is coming up to an area where there was previously a lot of rejections around here. And then if we basically draw a Fibonacci, we can identify that there's also a 78 Fibonacci in and around this area. So what we would do, we would have this as a zone of confluence alongside the dollar strength. So we are anticipating dollar strength, euro weakness. What could we then do? We could enter a position once price reached this area. We could set our stop losses as you wished, and then you can target again whatever you want to, whether it's the low for a 4 to 1, etc., etc. So this is basically how it would play out. You identify the area of strength and weakness, and then do the opposite on the FX pair. Alternatively, if you was looking to trade the actual dollar itself, if you look at something like US dollar JPY, we are identifying that we want a strong dollar in this area. Price is currently trading in and around these lows at the 149 region, which is here. So you could even use that as confluence and say, I'm expecting dollar strength from this area. I'm expecting dollar strength on US dollar JPY due to what we've said. So I'm going to enter a position. stops below the low, and then obviously target whatever you want. So it doesn't matter if you're buying or selling, just make sure that if you're trading US dollar led pairs, you are matching it up against the DXY. If you're trading something else led backed by the US dollar on the second part of the pair, that you are obviously just making sure that you are doing the opposite of what the DXY says. So as mentioned, this is something that I have in the curriculum. It's something which has worked very well for me, as you can see, based off the left-hand chart. So if you do want to learn a bit more in-depth information and how to actually trade the DXY, and to be honest with you, I'd probably say 80 to 90% win rate strategy, then the links are going to be in the bio. I'm here to help. If you do have any questions, drop them in the comments. And if not, I will see you in the next video.